Good morning, traders. Welcome to the TMT Daily Strategy video for Monday, March 26th. I am putting this video out over the weekend so you can peruse at your leisure. It's a big video. We have a lot to cover. On Friday, markets were down well over 2% across the board on all the indices that we follow. Pretty amazing stuff. Waterfall sell-off. Amazing. Many of you made a ton of money. I'm very excited to see that. I love to hear good feedback, positive, even negative feedback if that's the case. Whatever we can do to improve our research service. But many of you did well, and I'm really excited about that. We have a large video tonight, so I'm going to jump right in. We're going to be looking over our indicators to see where we are. Are we at washout conditions? Can the market go further? We're at and close to the 200-day moving average in a lot of the indices. And why do I point that out? Well, we also have the end of the month and end of the quarter mutual fund inflows, and we have window dressing from the portfolio managers and hedge fund managers. So what does that mean? Well, many of you know that. We do have a bunch of new subs that subscribed the last few weeks, so let me go over that again. If you know the dynamics of the market, you understand how the mutual funds work, right? Well, they buy high, they sell, they buy low, and they sell high, right? Retail buys high and sells lower. That's just the way it works. So the mutual funds, the portfolio, all the institutions, the professionals, they'll trick you into, not you, but the retail public, they will trick them into knowing that the market's going to break out or the market's going to sell off. When it gets too easy, either side, either direction, Mr. Market will take back those profits that they've made, i.e. buyers of dips, right? We had buyers of dips come in and even more in full force the last year and a half, probably let's say 2 years, 2016 and all of 2017, just buying a dip, rewarding them immensely. And everybody is putting their money, mortgaging their house to put in the stock market. We had inflows, right? Passive inflows from retail investors. 2 weeks ago was $34 billion. Last week, you know what it was? It was negative $15 billion. So 2 weeks ago, and I had mentioned this on my research video, that I believe the market has topped unofficially. Now, I'm going to call a market top officially when I see that. And I'm going to go through this with you tonight. Again, this video is for the weekend, and I'm putting it out for Monday's trade date, okay? So we have the mutual funds and everybody jockeying their positions for the end of the month, protecting their book. We also are at the 200-day moving average or near it. What happens with that is that they defend that 200-day moving average because of the fact if they start to break down below it and it closes below the 200-day, and it's not just 1 day but several days, they have to now reduce their long holdings and protect their book, meaning their portfolio. And obviously they don't want to do that because then they're selling at a loss. So that's really what happens. Mutual fund buys above the 200 and they start selling, or they reduce their long exposure when it's below the 200. And they don't buy as much when they're below the 200 because now you're in a downtrend. Okay, so just keep that in mind on how that dynamic works in the marketplace. So we have the McClellan oscillator, right? New York Stock Exchange McClellan oscillator. We are not, meaning at washout levels like we did in February, okay? That means that we can continue to go lower. Now, what could happen? Well, we had, again, down 2%, over 2% across the board on all the indices that we follow. Asia has to play catch-up. We have Europe that has to play catch-up. And then I think what would happen is either something comes out positively over the weekend, or we have some sort of another push lower into Monday, and at one point Monday, maybe even turn around Tuesday, we get the market to bounce. The market's going to bounce at one point, guys. We could test the February lows in Monday and Tuesday and then bounce. We're right there. We're really, really close. But we're extremely oversold, and we have to pay attention to that, okay? Do we shorten a hole? No, we do not shorten a hole. If you missed out on the so we really want to pay attention to what's going on here. We have the McClellan oscillator, as I mentioned. We're not far as a washout. So, yes, we could go lower, and we could get the washout reading in the McClellan oscillator. Now, it's only one, but this is one of our one that's in our trading model that gives us tops and bottoms. The next is the bullish percent, SPX. Okay, off a point and figure chart, and this gives you all 500 stocks that are in point and figure buy signal and sell signal. Well, this is in the sell signal. This was the February low. You can see here we're not quite there. We're close, again, close. We are at washout readings, but we're not as we are. I like to look at the previous sell-off, which would be the benchmark right around here. Right now would be the 40. So we're close, though. Could that be a sell signal right now? Sure, I think so. Oh, this is the McClellan oscillator again. Excuse me. Stocks above the 50-day moving average. Washout levels, absolutely. We're at 15.66%. So stocks that are above the stocks in the S&P that are above the 50-day moving average is only 15%. Washout levels, okay, just like we did here in February. So we're really close for washout levels as far as basing and bottoming here. All right, this is the NDX. This is the NASDAQ above stocks above the 50-day moving average, again, at 16. Worse than it was in February, so we are there now. So what does that tell you? That tells you that at one point, between, I believe, based on our technical view here, I believe between Monday, Tuesday, and even throw in Wednesday, just because we're going to bounce and we're going to bottom somewhere, okay? And when that does happen, and that market sells off and makes a lower high again from the previous two highs, I'm going to officially call a market top. And that's when we will start legging into shorts. And I will tell you, position traders that are out there that are following us here in our subscription videos, our research videos, when to start legging into some shorts. It's going to be easy to manage. And I will go into that when we get into the ES and everything. Here's our money flow chart, okay? I've showed this to you many times. This is a great chart that shows you if money's flowing in or out of the index. This is the spiders. SPY, as you know, it's this S&P 500 ETF. Here's the RSI. We're at the bottom here, bottom of the range. Okay, here's the 200-day moving average for the SPY. All right. Now, what you see here, we have major distribution for the last. We have 8 for the S&P and 6 distribution days for the Nasdaq. Okay, this is going on a full-blown sell signal for me. I think. They say, oh, market's under pressure a little bit. I think the market is a little beyond market's under pressure. I think, we have 8 trading days. Now we had small little days, and that's what happens. Small little days, a pause day like we had here, an inside day, and then boom, the gap down and the follow through. This is where the buyers of dips are getting cremated right now. These are the retail public that bought this market up higher 6 days in a row, challenged the highs here. We double top here. But remember, we still have gap areas of resistance. Where I want to show you. But this is not the price action that I'm going to pay attention to. I want you to pay attention to down here. This is where it really, really is important. Here's your accumulation line. We are now below that. We are officially way away from that. As we were here a little bit, it gap right up, here, pop right up again, and look at that. We're way away. Okay, chalk and money flow. Look at that. Distributions all day long. Money flow index, force of the move, of this move, negative. So money is officially coming out of the S&P 500. So we need money, right, to move higher, right? We need money, people to buy, institutions to buy, right, and move these stocks higher, not to sell, okay? So that's a big, big problem for the bulls. And I mentioned this before when we were up here, okay? Now we have the double top. Okay, so now what I want to do is I want to talk about a couple of sectors, and while I'm talking about a couple of sectors, before we go into the indexes. Now, we had crude oil, right? Let's take a look at the commitment of trader reports, which is always an ideal situation. Crude oil tagged like 65 and change, up $1.50 when the markets were melting down. What's going on here? Producers are adding to their shorts. Why? And I'm going to show you on the chart that crude oil is looking right now bound to start looking for a pullback. Do I say a bear market? No. But at these highs where we rallied for 5 days straight up, at one point this market is going to come back in again. And it looks like to me it could very well set up for this week. Now here's the tricky part with the oil stocks, but let me get into that in a minute. So we have OIH, which is the oil services. Why isn't this rallying when oil has exploded higher, right? We have OIH not going anywhere, right? We have now SMH, which is the semiconductor index. Look at this massive pullback. Micron, ADI, Micron Chip Technologies, Marvel Technologies, CLAC, KLAC, Intel. All of these stocks are so overvalued and so high. Micron took it on the chin when they reported earnings. They guided high, reported, but something didn't look right with Micron's numbers. They were talking about, and I didn't look at the whole report. So mind you, if you want to really look at it, please do so. But Micron was talking about DRAM prices and what have you. But again, looking a little bit more dismal. So here's the SMH. But if you look at Micron, Micron was really weak. Was one of the leaders of the group and actually sold off and helped everything else to go to the downside. XLU, okay? Interest rates were rising on Friday. And what happened? Now, we were looking for this to break back up again. Remember, we were talking about this. Look at the symmetrical triangle, and now we broke down below it. Now, what do we need? We need another day to close below this lower trend line. That would trigger a sell signal. Your stops would be right up in here if you were trading the XLU. There were a lot of good stocks, a lot of utility stocks that were breaking out. But there are also a lot of false breakouts here. That's what happens. You just do not have enough buyers to push these markets or these industries and these sectors out of their consolidation phase. They just start to roll back over again. That's another sign that the market is tired and the market needs to sell off. So XLU not doing it, okay? Well, we need another day, okay? Let me just show you Amazon, one of the FANG stocks. Horrible. I mean, absolutely horrible. You got to hear the pundits on CNBC and Fox Business News, and I'm not going to mention any names, but one guy in CNBC saying, "Oh, Facebook is cheap. Facebook is cheap." Yeah, well, Facebook is cheap 15 points when you said it on Wednesday. How about now? Is it even cheaper now? You might as well buy it more. It just they destroy the retail crowd, and I feel really bad about that. And especially with Amazon, all of these people, all of these so-called analysts they bring on. You got Amazon's going to 1,700. Well, yeah, maybe it needs to go to 1,200 before the 1,700, right? So, anyway, the reason why I'm saying this is that all of these FANG stocks, these high beta names, and I've been mentioning it for weeks and weeks and months, when the FANG stocks top, the market will officially top. Well, there's Amazon. Yeah. Let's take a look at something here. Let's take a look at Apple. Okay? Get that? Apple doesn't look like it's going anywhere anytime soon, right? I don't even want to get into Facebook. I don't want to show you Facebook. There's no reason to show you Facebook. But let me show you Netflix. Facebook is getting clobbered. Netflix rolling over. So, and Google. G-O-O-G-L. And again, I'm showing you this because I'm trying to give you guys evidence. Look what's happened. They've all rolled over. They're all making lower lows and lower highs. Facebook has officially topped, right? I'm going to call a market top on the next rally. When the rally fails, okay, and when let me get into, you know what, let me talk about that in a moment. Let me just get into the VIX first. Bull flag in the VIX, what happened? Break out of the bull flag pattern. Now you take this and you go like this. Guess where this thing lines up to? $71 off the bull flag pattern. $71. And if you think that can't get there, think again. And I'm just talking in general. I've seen it many times when we have a market meltdown. I've seen VIX explode 100 points back in some of these other crashes that we were in 2000, 1990, I think it was 98, the China debacle, and then of course 2009. But this, to me, when this started holding this area at 39.88, where we had our algo out of support, I personally just like to see this thing really go back lower, and I thought it would go lower, but it did not. So many of you did buy the VIX here, looking for lower to add on to do a dollar cost average trade, so it wouldn't hurt you even if it went back down here. I just didn't do it, but hats off to you guys. Some of you still have it, and I do think that on the next rally we'll get the back test. And on that back test, usually what happens when you get the breakout, you get something like this, like we have now, right? Let me just go off to the side. We break out. Now the market rallies, this pulls back, makes a higher low from this previous low, and then explodes higher. Okay, unless you just have a pure full-blown market meltdown Monday, Tuesday, Wednesday, which I don't think that would happen. I mean, we're just so extremely oversold. But that's the case for VXX. We're at right now resistance at 50.52 up to the 56.25. So we're in here. We should top temporarily and roll back down again. But that would give us a higher low from the previous low. And that's how you trade that bull flag. Weekly chart, okay? We are below now this trend line from 2016. We officially gone and out below. Does that mean to sell the market? No. We wait one more week. We need 2 full weeks. This is a weekly chart to close below. When that happens, you have to sell rallies in the S&P 500. That's the way we look at it, and that's how the algos work. ES. Okay, so now let's talk about the map of the market, what we were just talking about previously. So we talked about here, we had this move up. Remember, we were talking about we were going to either test the lows or make a higher low and try to fill that gap. Guess what? Markets were so weak, it didn't do that, right? It actually sold off, right, creating an M-top formation, right? And here was your neckline, and we broke through that neckline, and here's your support. We're almost there. Let me show you. Look, here's that wick of that candle. We're almost there, maybe 20 points. So why not tag it tomorrow? On Monday, right? So we tag it on Monday. Where do we go from there? Well, remember, we got 2 big areas of gap resistance. I understand. Mark, are you kidding me? It's far away. You're talking a couple of 100 points. Well, look what we did in about 6-7 trading days to the downside. Okay? And if you don't think Donald Trump is talking about, oh, this market, I don't like this market, we got to talk this market up. He's a Mr. Market guy. That's how he gauges his success in the market. If you know this, he touted many times about the stock market, how in his tenure he hit 4 milestones in the Dow Jones. So I think that we're going to probably bottom here, somewhere in here, and then I'm looking for a gap fill. Now, I don't know if this is going to happen where we're going to get the gap fill all the way up here. But it's at one point we're going to get a rally and maybe fill this gap here and then actually start looking to add and dollar cost average shorts if we even get this far. I don't even think we're going to get that high, I'll be honest with you. I think the markets are in deep trouble, and I think even if we take back the 2 days and get back to here, I think everybody that's caught, remember the psychological part of the marketplace, tons. Look at this bar. Right? Look at all the buying in green. Look at all the selling in red, right? So in here tells you a story. That's why I like this area here. This is your line right here. When the markets come back to this line, there are going to be everybody, every retail trader, every pajama trader that's been in here buying as it was going up, saying we're going to new highs. They're going to sell and say, oh my God, I'm flat, I'm getting out of this market. And that is it. And that's where the market goes lower. And that is exactly what I'm looking for this week. It might even be this week. Maybe we sell off again Monday, Tuesday, maybe even into Wednesday we start a recovery. Because why? We're going into the first quarter. Now remember, we have a full week of trading before the end of the quarter. So that means to tell me that maybe we sell off Monday, do a turnaround Tuesday, we pop up, and then continue the selling, and then kind of start to stabilize Wednesday, Thursday, and then again big positive day Friday, follow through on the 1st and 2nd of April, and then chop around and then get that sell off in April like we were talking about. But that's what I'm looking for, guys. We're really close. Here is the 15-minute with just price. We just broke the 2650. We tagged it, right? So what happens here? And there's another scenario you can do, right? We're so oversold. I mean, we're straight down. You can see that. We come right back up, do something like this, tag the 2 gap fills and leave this one alone, and then right back down to this area here, 2635. Or that's your first scenario. Or we could do this. We could just melt down on Monday, tag that, get that gap fill, and tons of buyers step in, push this market all the way back up to here. I wouldn't even say to 2790. I was really looking to fill the gap here. And then right around here, start to sell off and really start to sell off hard. And that's what I'm looking for. Okay? NQ. NQ held up relatively well, but we take the 76% retracement. Look at this, right to the penny. So Fibonacci retracements work, guys. And if you want some more information on it, just give me an email. Send me an email, support@tradingmarkettechnicals.com. I'll send you some information. We can even talk about it if you need to. 65, 17, 37, 76% retracement. Your next support will come in at the 64.40. That's the bigger area of support. And then the 200-day. Here in green is the 200-day moving average, 63.10. We got to pay attention to that, okay? Resistance will come in at the high here, the 61.8% retracement, 66.43. Diamonds is almost there, almost tagged it. This is the Dow Jones ETF. So pay attention to the 233.50, okay? Resistance will be that area here at 241, and then again 246.62 way up above there. Those are your areas of support, but it's going to be the 200-day that's going to come into play on Monday. Transportation sector, we're right there at the 200-day as well. You can see that, 181.59. All right, now it finally broke out of its symmetrical downtrend, symmetrical triangle, and it broke down from it. Let's see if we get the bounce play. Remember, all of the fund managers are watching this. Look at if I go back, you can see how if I go back all the way back, how we never really broke the 200-day moving average. And you know why? Because the fund managers are fighting it and protecting it. Right here, look, broke down, we popped up again. Here, broke down, popped up again. And then here we go. Right up and down, and we popped up, and look, it held. And now we're testing it again. I think you're going to knock on that door again, and that's going to break at one point, and we're going to separate. But we need to separate from that 200-day. So let's pay attention to what's going on in the transports. Spiders tagged it right to the penny. There you go. 200-day moving average. That's going to continue to be support. I think we're going to flush right down here to this 252.89. That'll be the low. We'll double bottom at one point, and then we'll rally back up. And then once we look at the 20, by the way, look at the 20 and the 50-day crossing back down again. Once we get back up into here, this 270 or even this little cluster here at the 240, 266, that's going to be the spot to start selling lower, in my opinion. Again, we'll let price tell us what to do next, but once we get that higher low and we fail, I'm officially going to call a top in the market. Here's the Qs, and you can see, look at this, just a massive meltdown here, 158.66. And then we have the 200-day moving average, which is doing a little bit better, the 152.28. I'm going to talk about sectors at the end of the video, but at the moment, let me just run through the IWM right here. 200-day moving average, 148.16. Write these down. The 200-day moving average is going to be critical on every indice that I'm showing you. Upper end of the, lower end of the TMT proprietary price channel, 153.37, and then of course the 156.09. Now bonds rallied on sympathy, right, in a safe haven, right? So we had bonds and gold rally. It's to be expected. Is bonds done with their downtrend? Absolutely not. Bonds are headed much lower. Bonds will continue to go lower. Once we get a relief rally, you'll see bonds start to sell off again. Okay. TLT, pretty much the same. As you can see, we're underneath the 50-day moving average. I'd love to see this explode higher. And then once we get done with the downtrend, I would short bonds all day long. Rates are definitely here to stay, at least for the short term. Now, let's talk about gold. Very important. I love gold. I love to trade it. I love to watch it and do the analysis work on it. Look what's happening here, commitment to trade reports. The producers are saying, hey, let's reduce our short side because gold is going to go higher. And look what the speculators are doing. They're reducing their longs. So this is telling me that gold is going to lift or has lifted, right? We don't know for sure, but it's a good sign that we have GDX breaking out of this base. But it's really, guys, it's really on this fear factor trade right now. That's really all that's driving gold. We need to see a big pickup in a big move. It looks like it's going to break out, but GDX is not even close to breaking out of this area, right, of the 25. So I'm treating this rally as suspect. Does it mean that you couldn't make any money? Of course not. You could definitely make money, but the risk is a little higher. Here's the GLD daily chart. This area here, that 128.43, is the breakout. You can see that all the way back from 2016, from September. Look at what we've done. Really, pretty much of nothing. Just chopping around in a big range. And if anything, right, what does this look like? If I take this corner, it looks like a very large ascending triangle, which is actually very bullish, right? Because what is it doing? It's making higher highs and higher lows, right? Well, let me, that one here, and that one here. Higher highs and higher lows. So we're definitely doing it. And we've consolidated just under the underbelly of this area of resistance. So it could break out. And if I open this up a little bit, this is GLD, the ETF for gold. You can see that we've gapped up here. The only thing is that gold is notorious to flush out all the weak longs and momentum players and then start its trend up. I think it's too easy. All right, and you've heard me say this many times. Let me show you the gold contract. This is the GC contract. This complex head and shoulders pattern is still valid until it takes the head out. So we got to get above 1358 on a closing basis. Then this bearish pattern will be negated. All right. Until then, it's still valid. Again, has not triggered, but still valid. We need to see close to 1,400 get taken out on a closing basis, and then we would rush up, believe it or not, all the way up to 1,700. And I see it when fear really creeps in, gold's going to rip much higher. Absolutely. So I love the gold trade. I don't like it here. I'm not a big fan of chasing gold, because gold will do basically this. It'll break out and then just sell all the way off. Look what it did. So if you see the patterns, you'll see what I'm talking about. We break out of this area, right? It's the same area. Sell all the way down. Break out, sell all the way down. Break out, go even further, sell all the way back down again. Then we sideways and we go all the way back down to rally all the way back up, and we tested, bounced, tested. Now we're making a lower high. To me, all these other repetitive patterns, I think the market goes. I think gold, at one point, when the equity markets stabilize and start to go higher, you'll see gold go lower, and of course you'll see bonds go lower. So now, if we had 2 or 3 big down days in gold, I'd be buying it with 2 hands. So you understand what I'm talking about. And we got a gap area that needs to get filled here. So if we do rally, gold will sell off and fill that gap. Now, if we stabilize more above 1,300, I don't mind starting to add to the position. Because why? Because the equity markets are deteriorating worse than expected, and quickly, much more faster than I thought it would. And then I would start dollar cost averaging like we did here. I think it was back here. We actually started buying here. This is where we bought right here. 1,300. It was like around 1,300. Then we bought here, and then we sold at 1,311 with a nice dollar cost average. So that's what I'm paying attention to. And again, crude oil, we talked about that, right? We talked about crude oil with the symmetrical triangle. I mean, guys, this is a massive gap higher. We're looking at almost 4 points in 4 days. And here is a big area of resistance, and it's a very crowded trade. And we have the speculators buying more, and we have the producers shorting more. So if the producer of the smart money in the report, what are you going to do? Well, you're not going to buy stocks. And even then, the point I was trying to make is oil stocks haven't rallied. They really haven't rallied. They look great. They look like they want to break out. And let me show you. Let me show you a couple real quick. Here is FANG, Diamondback, one of my favorite oil stocks. All right, excellent company. But look what's happening. We have an inverted head and shoulders, right? And what does that mean? Obviously, it's like a head and shoulders. That's a bearish pattern. But we have a bullish pattern, an inverted head and shoulders, right? Which is pretty bullish. Neckline comes in here. However, the inverted head and shoulders usually does not work when you're at a tail end of the move. It's always here. If this head and shoulders was down here, I would be buying it with 2 hands. But since it's up here, I'm not saying it can't work. It gives you less validity to the move, okay? Now, a lot of the oil stocks have broken out and failed. Let me show you CVX. As you know, is one of my other good traders. I love to trade. What's going on here? You see, we broke out, and then we failed miserably. Let me open this up a little bit. Okay, you're going to see Diamond Offshore, DO. These are stocks that I love to trade and I love to build positions in. What happened? We broke out, we sold off again. COP, ConocoPhillips. And on and on. All right, now Conoco was the exception to the rule. Let's take a look at, let's see, HES. Another good one. Okay, sold off again. All right. My point I'm trying to make is that if we did not break out, we tried to break out and failed. Range Resources, RRC. Take a look at that. Really hasn't gone anywhere, right? So my point is that if the oil is breaking out, and oil stocks and oil services stocks, I showed you the OYH ETF, haven't really broken out. And when oil is at a tipping point, meaning at a big area of resistance, it starts to roll over, what do you think oil stocks are going to do? They're just going to get pounded even more, because oil is starting to roll over. So my point is that I'm looking I am bullish oil, but not here, not even close to being here. I want to see oil come all the way back down. I want to see these oil stocks get washed out, and then you can start picking up a basket of them. In the meantime, I would stay away being long oil, or building a position in oil. Trading oil stocks for the day, sure. You have your setup, you get stopped out, and you move on. But I would be I'm more bearish on oil here at the moment. Now, if we break out and we hold this level for 2 or 3 days and we break out of that level, then I would look to buy oil and oil stocks. But right now, at an area of resistance here and a big move, I'm more inclined to say, look, you know what, we'll get a back test of this area and then move higher. I have no problem with that. But for the next week or two, I think oil comes in a little bit, just based on the over. And look at this. And guys, another thing too I want to show you is look at the momentum indicators. Look at what happened with this move here. Let's say this move. We're overbought and we continue to be overbought, which is strength in the market, right? In this commodity. We break down. Look what happens here. We get not even close to being up where we were here. And now we try again. Now we break out, and we're just basically tagging here. So the momentum really isn't there. Now price pays us, I get it, but you got to be careful. And we're starting to roll over as price is moving higher. So it's something that I want you to be careful with. That's all, because I got a bunch of emails. A couple more, and that's it. I know these are long. It's a very long video. Gold 10-minute. You can see we gapped up. We got gap area needs to get filled here. 1351 is big area of resistance. Pay attention to that. And then we got the gold gap up of 1343 all the way down to 1330. And then last is going to be your crude oil. Okay, crude oil again 66.22 all the way up to 66.44. All right, that's your crude oil 65.54, and these are your levels of support for today's trade, guys. Market is giving us exactly what we're looking for: volatility. When we have an increase in volatility, we have markets that are moving. That means we have a lot to trade and make money off of. Have a great day. Be very careful. Remember, this week's going to be a real interesting week to see what happens. Hopefully what we mapped out for you works well. Have a great day, and we'll see you tomorrow.